All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Wednesday, May 10th, 2023. We just had our CPI number, so let's go over that quickly. I'm going to go read it from the Twitter page. If you haven't followed us yet, make sure you do at GAR Capital on Twitter. It is free of charge for everybody. It will always be free. No subscription needed. Okay, so I'm going to scroll down. I just wanted to retweet this piece of info from Stock Market News. All right, let's go over it. CPI year over year actual was 4.9%. Let's go over it here so you guys can see it. Here we go. Here's our CPI number. Actual 4.9%, forecast 5%, previous 5%. I broke it down yesterday in regards to the S&P in terms of the roadmap. We'll go over that here in a second as well. We also have year over year 5.5% on the core. Again, that's excluding autos and gas. CPI month over month actual 0.4%. That met expectations. Month over month 0.4 expectations. So that's why we're getting the boost this morning. I talked about this on the futures chat as well. I'll show you that. 41.20 support held overnight. 41.60 needed for a break for more upside. We are now on ES at 41.66. I believe we go higher to 4,200. But yeah, you can see that interest rate futures rise after CPI report as traders add to bets on a Fed pause. So Fed swaps are downgrading the odds of a 25 basis point hike in June. So that's what the expectation is. A lot of Fed funds futures traders were doing the same for the last rate hike, that was going to be a pause. And that didn't materialize. Obviously, the difference being the bank issues. But that didn't happen. So betting on a pause can be a little difficult. Obviously, you don't have control over that. But that's where we are at least. Dow futures up 163. You can see the 10-year Treasury yield down below 3.5, 3.460, 101.23 for the dollar. Let's start charting things as we go along. Okay, we're going to start with the dollar here. Here's the dollar again, until we break 100.8. I think that's right around 4,200 ES. If that breaks, we'll probably break that 100-week moving average on the S&P 500 futures. You're officially in a bull market, and then really the next level is 4,300, which is your August highs in terms of the S&P 500. Still watching the dollar again, still depth cross, still bearish. We know the drill is going to go down. It doesn't matter if the question is when. Volatility index, we still have a gap to fill at 1615. I expect us to fill that gap today. Once we fill that gap today, we may get a little bit of chop. Maybe this doesn't last too long. Maybe we get to the S&P up to 4,200 with that gap fill, or a little more, maybe break to 1553. But that's where we are on the volatility index this morning. Let's go to NASDAQ futures and that 100-week moving average. That's 13,463. Nick made a note of it on the blog. We're going to go to the weekly chart. That is your money level. That's the level where we want to get out of any kind of calls short term and just move on. And that's probably the level we're looking to short. If we break above that and actually settle on the weekly, we need to settle this week above 13,463, actual week closing, and then we can start talking about higher. Until we settle above that on the weekly, all this is just the same old chop. We're just in the top end range of it. Not saying the world's ending, just saying be prepared. Here's the S&P 500 futures. Same deal, 100-week moving average right there around 4203, 4206 or so. We'll see on the hourly 4166. We're starting to break out. We do have an inverse head and shoulders. Here is the breakdown on that from the futures chat. Let me see if I can get that going here. All right, here is from our Discord channel. Here we go. This was yesterday at 10:20 in the morning. Pretty choppy market. Here's a trading plan. ES on 1 hour long, as long as we hold 41.20. You can see right here, we got to 41.20.55. We held that neckline on that inverse head and shoulders. We're starting to break now, 41.60. You're at 41.67 now. So again, it's all technicals, guys, at the end of the day. Nothing has really changed. I mean, we knew that inflation was going to slow because of the high peaks that we had last summer. And it's only going to go lower because unless we get a crazy deviation in gas prices or commodity prices, or the dollar really, really tanks, inflation is going to continue to go down. That narrative's pretty much dead at this point. Now the point is, national debt and debt ceiling and then growth scares. And of course, debt, that's kind of the big one. So inflation is already kind of subsiding. We see that already. Now we're at a 4.9 print year over year on CPI. Is this enough to get us over the top? I still think we're in a technical market. The market needs to prove to us that it's worth buying. It needs to prove to us. The onus is on the bulls now, since you're in the top end of that range. When you're at the bottom end of the range, it's the onus is on the bears. Hey, what do you got to do to show me that we're going to continue to go down? So I think we get from 41.67 up to that 100-week moving average. Again, you can see if it breaks, we can short back to 40.60. That's 41.20 last night that we actually bounced. 41.85 is the target. Breaks, then the target is 42.06. I said 41.60 for a long, but again, you can see it here. I went a little early at 41.80. I wanted to catch a little bit of points. We are long ES now. Again, I'm going to be sliding those stops so we can make sure we get a flat stop as soon as possible, as long as we don't lose. That's kind of the deal. And then we can start making decisions. But 4,200 today should fit the actual narrative or the seasonality where you get the early May push and then you roll over a little bit. Tomorrow, according to the Stock Market Almanac, is a bearish day. Can't really depend on that. But again, I expect us to rise today. I expect us to reject tomorrow. So again, what you're doing, if you have any longs, you're really just looking to continue there, especially break out of that range, or you're trying to catch this move for around 30 points right now. It doesn't mean anything special has changed. The softening inflation has been kind of priced in. The only reason we're getting these moves here, guys, is purely technicals, and that's it. Nothing really to get too excited of. So again, 1776 print on the VIX. That was yesterday. We're at 1644. We talked about that gap fill around the 1617 mark. We want to see if we fill that gap. That should get us a little bit of a pullback. That's where you kind of want to look at, kind of pulling back your longs. And again, I'm not against shorting yet, but we're just not there. And when we do, we'll do that accordingly. We'll short and we'll ride that down back to the breakout point, which is 41.30. We'll just call it. All right. When you say ES 4160, that means SPX 4160. No, ES is futures, and again, that moves throughout the day and night. SPX is just spot. The deviation between ES and SPX, at least right now, would be 20. I would say the deviation is right around 20 points, if anything. So again, think of it as like a 20 point spread between SPX and ES, and that changes, that tightens, that spreads. Just depends on the volatility. But again, I use S&P 500 futures because that goes all overnight. And again, it's the most liquid contract on the planet. And we also have a lot of members that trade overseas, and they don't do the spot. They do ES. ES is just an easier way to trade for me. Do you see ES pulling back to open the test to 07 fibs the day before to 4,200? No, I think we're going to go to 4,200. The only place we may just kind of run out of gas is maybe around 41.90 to 41.85. So you could see it right around here. We may just run out of gas here. And again, guys, that is just the same place we were last Tuesday. And then the two Tuesdays before that. It's just bouncing. All we're trying to do is just catch those small deviations and get paid because the market is just chopping. So this is a trader's market. We're looking for opportunities while making some cash, making some interest on our cash. There's nothing really much to do other than that in a choppy market. CPI numbers were good. Does that mean interest rates need to go up? No, that would mean interest rates are going to go down because if the Fed pauses or stops the rate hikes, that means shorter term interest rates are going to fall based on all the buyers who are trying to lock in these high rates now. So again, it's kind of like the market heals itself in a way. So that's where we are. I expect, again, this is the same thing we talked about on our video. If you haven't checked it out, it is on our YouTube channel. It was the Investment Club thesis video or planning for the year. And we talked about the same thing, lower inflation, lower dollar, lower yields. So far, so good. And if we stay with that pattern, again, 4,300 is in the cards. I think our target was around 4,300, which was the August highs. We may break that, but we need a couple of more positives in the market. In terms of stocks, we did trade Netflix yesterday. Let's go ahead and take a look at it. I closed out of that thing. We had the 340 calls. Was it 340 calls? Yes, 340 calls. And right now at 336, I got out of those runners. I got as high as 85% on that trade. I did not personally. Nick did. He got around 85, 88%. I got out at 45 or so. it bounced up first in the morning yesterday, pulled back, and then it bounced, and then it soared. Well done to the team for staying patient because it was so fast when I sent the screenshot. Again, I tried to do the screenshot and send it to you guys. But at the end of the day, we took it, and it was, it was good risk management to take it because of the fact that we had CPI today. So Netflix was a good trade. Well done. Breakdown is on our Discord. Awesome job. One more. I think we have Disney open. That's not. I know we have Disney open. Earnings are after the bell. You can see 102.71. We broke above that. Thank you, CPI. 104 should get us home. We have the 105 calls for Friday. All we want to do is play the run up into the earnings. Maybe if we start breaking above 103.91, 104, the demand starts pushing in, then we can start making decisions on either taking the Disney play, leaving a runner, or taking it all before earnings, or letting it ride. Again, the idea is just to have options. But nice setup on Disney. I think we go higher off earnings. But again, anything can happen. PayPal took a massive dump. So again, I have the target here around 107.47 post earnings. We'll see if we get there. Again, I'd rather make sure and lock in the profits ahead of time and then keep the risk lower, even though the analysis is higher, because anything could happen. So again, we just want to lock in our gains. I went ahead and did Amazon for the masterclass as well. I sent out this chart on Twitter as well. Let me see if I can get that. Let's see. I'm gonna actually look for it, and then I'm gonna retweet it. Uh, 108.36 pre-market. There you go. Okay, I sent this yesterday in the morning on Twitter. I got some likes, who cares? And this was the chart I had. You could see it right around 106.61. That was the break I was looking for on the hourly. I went long with Masterclass for the 107s. Let's see if I can show you how much more upside we got. So 107s are in the money. This was kind of my alert here, 108.02. We broke that right now. You can see that we're starting to get to around 2 Fridays ago resistance. I want to get out of those Amazon calls as soon as possible. So Masterclass, if you are watching, make sure to get out of this trade right first thing in the morning. Take your profits. You can leave a runner if you like, but I'm going to move on and just take it. So pretty happy about that trade. Other than that, it's been a slow and steady day. Other than CPI, there hasn't been much action. It's been chopping the last 2 days. We caught NVIDIA and Netflix. So we'll go over the exact trade exactitudes of what we did, how we got in, what did we expect, and kind of the play-by-play highlights of it on Friday. But as of right now, Disney is the only setup that we have that's a signal, and it should be green this morning as we continue higher with CPI. And also the futures signal that we sent out is now green, and we should be able to get that relatively soon. Actually, I'm going to go ahead and move the stop. Let's move our stops on ES to 41.50. And we're going to go ahead and just slowly but surely, guys, get this trade by doing it correctly. See the entry here at 849. We have the roadmap. We just talked about it. We move the stops to 41.50. We are now up about, 7 points. So nothing to get too excited about, but we'll see what we get this morning. Well, that's what we got, guys. Thanks for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time. Make sure to subscribe to our YouTube channel if you haven't already. And make sure to follow us on Twitter. Some great things there, guys. And if you like the way we trade, you like the analysis, you like me explaining things as we go along, would love to have you on board. Make sure to join us on our Discord server. Follow us at GAR Capital on Instagram, and our website is www.gar.capital. Link is in our description. We'd love to have you on board, guys. Have a great rest of your morning. Happy trading. Let's make it a great Wednesday. I will see you guys tomorrow. Cheers.